outbound Far East main ports again to North European main ports. You can see that on the top left. A lot of the same as we see on Transpac. What I find interesting here, and I want to highlight as well, is that we've always been very vocal about ocean freight not correlating with oil prices. And I think we have a beautiful example here where, you know, the short-term market spiked going into 2020 with IMO 2020 cost increases, sort of from a psychological point of view, really hit everybody. You could see long-term contracts got settled at a higher level, and immediately after you had this massive drop-off, which, you know, you can argue it correlates with the decline of the oil price, but then this uptake does not fit at all. So you have completely opposite patterns of that. Yet I want to flag that also this corridor is on a historically high level almost. I mean, we find further back in time high levels, but if you look at it over the last 3 years, this is a very high level, super healthy for the carriers. We expect the carriers to publish even better and bigger profits than we've seen so far. And as we're closing in on the contract period on this one as well, we start to see even further uptakes on this corridor. Let me just quickly click into the future rates here. As we have contracts now running well into 2021, we can show where the long-term market is heading for these corridors. And as we've always said, the short-term market is a good early indication of where the long-term market will move. And I'm pulling a lot of data here from Far East main ports into North European main ports for a prolonged period of time for the short and long-term market. So I'm going to give it a second more to load here, and then we will see what do we expect in terms of an uptake on the long-term market going into 2021.
Maybe while we let that load, you know, before we jumped on this call, you were telling me about kind of how you thought the exposure to uptrend in the spot market wasn't as drastic in the Northern European ports because some of the backhaul lanes are kind of fronting some of that cost for container repositioning. I mean, do you want to maybe expand on that a little bit?
Wow. Yeah, that's an interesting view. I think on the European side, contrary to the Trans-Pacific eastbound, we've seen an increase also in cost on the backhaul. So one of the arguments we made when we looked at Trans-Pacific is that here on this corridor, the backhaul has hardly seen any cost increases, more or less a flat market, actually a market where shippers, exporters have opportunities for cost savings with a declining market. So the carriers are sort of giving it really cheaply to get the boxes back so that they can get this benefit of this trade as they go on the front haul, versus the European counterpart is quite some different.